Welcome to News Edge, your sharpest source for daily headlines and deep dives. If you're new here, don't forget to hit that subscribe button and stay ahead of the curve. Good evening. For years, landlords raised rents with impunity. Confident renters had no other options. But now the rental market has flipped. Landlords are panicking. Welcome to the great U.S. rental market collapse of 2025. The ground beneath the rental market has cracked open, swallowing endless rent hikes and record-low vacancies. For renters, this sounds like great news, but it's complicated. The system has snapped back in ways no one predicted. Headlines scream, "Rental apocalypse." And for once, they're not exaggerating. Landlords who once fielded dozens of applications are now offering free rent, gift cards, even puppies, anything to fill empty units. The power dynamic has been upended, leaving chaos and confusion in its wake. Tonight, we'll dive into how we got here, why landlords are panicking, and what this means for renters and the economy. This isn't just a story for real estate nerds. It affects where you live and what you pay. So grab a drink and let's explore the spectacular implosion of the U.S. rental market. It's going to be a bumpy and oddly satisfying ride. The most shocking development: rent prices are falling. For the first time in years, national average rents have dropped, sometimes by 10, 15% or more. For renters, it's a miracle. For landlords, a catastrophe. This didn't happen overnight. It started with supply and demand. Developers, lured by high rents, built apartments at a breakneck pace. But they forgot. You need people who can actually afford these places. Now we have a massive oversupply. Too many apartments, not enough renters. Landlords are in a price war, slashing rents to fill units. Many bought at peak prices, assuming rents would always rise. Now median rents in major cities have dropped by hundreds of dollars. The era of landlords naming their price is over. Power has shifted, at least for now, to renters. The dream of passive income has become a nightmare of empty units and frantic discounts. The market can fall just as fast as it rose. The real reason rents are falling? Vacancy. Empty apartments are financial black holes, costing money, generating nothing. Vacancy rates are soaring, especially in cities hit hardest by overbuilding. Developers built thousands of new units, all hitting the market at once. Suddenly, renters have choices and leverage. Now, when your lease is up, you can move to a brand new building offering lower rent and perks. This churn leaves landlords scrambling to fill units, often at a loss. High vacancy is driving landlord panic, forcing them to lower rents and offer incentives. Some landlords, over-leveraged and expecting endless growth, are now in serious trouble. Their business models depended on full occupancy and rising rents. With empty units and falling prices, that model is collapsing. The market is correcting itself, brutally. Landlords are learning vacancy is their worst enemy. Landlords are panicking, and for good reason. Their income is plummeting as rents fall and vacancies rise. Expenses, meanwhile, are climbing: property taxes, insurance, maintenance, all up. Mom-and-pop landlords are especially vulnerable, with little cash to weather the storm. When a unit sits empty, the mortgage still needs to be paid. Many are facing foreclosure or forced sales. Desperate, landlords are waiving fees, offering free rent, and flooding the market with ads. But even selling isn't easy. Buyers see the same risks and want steep discounts. Landlords are trapped, can't rent for enough, can't sell without a loss. The financial squeeze is relentless. The rental market, once a safe bet, has become a financial minefield. The panic is real and spreading. The old rules no longer apply. Landlords are learning that the market giveth and the market taketh away. To see this crisis in action, look at cities like Austin and Boise. Austin was booming, Tech jobs, sky-high rents, endless construction. Now, it's drowning in empty luxury apartments and falling rents. Landlords who bought at the peak are facing harsh reality mortgage payments based on rents that no longer exist. Boise, another pandemic boomtown, saw prices soar as newcomers arrived. But the migration slowed, and now the market is priced beyond what locals can afford. The bubble popped. Vacancies up, rents down. Investors who thought they'd found gold are struggling to find tenants. Phoenix, Charlotte, and other former boomtowns tell the same story. When hype outpaces fundamentals, the crash is brutal. These cities are warnings. Hot markets can turn cold overnight. The pain is real and spreading. The lesson? No market is invincible. The fallout is national. With landlords struggling, is this a renter's paradise? For some, yes. If you have a good job and credit, you can negotiate better deals. But the collapse doesn't solve the affordable housing crisis. Most new empty units are luxury or mid-range, still out of reach for many. A 15% discount on a $3,000 apartment is still unaffordable for most workers. Financially stressed landlords may cut corners, delaying repairs, neglecting maintenance. In worst cases, foreclosure can force tenants out with little notice. The benefits of this collapse are uneven. Higher income renters win. The most vulnerable may see little relief or new problems. The market's dysfunction hurts those with the fewest resources. It's not a renter's paradise, more like purgatory, with slightly better deals. The power shift is real, but the problems remain. The housing crisis is far from solved. How did the invincible rental market collapse? First, massive overbuilding. Developers, chasing profits, flooded the market with high-end units. Second, economic shifts. Inflation eroded buying power, wage growth lagged, and tech layoffs shrank the pool of high-earning renters. Third, changing preferences. Some moved to cheaper areas, others doubled up or moved home. The work-from-anywhere trend softened demand in expensive cities. Most importantly, there's a ceiling to what people can pay. Years of price hikes hit a wall. People simply ran out of money. Investors built on spreadsheets, not real life. The result? A delayed, brutal correction. The market ignored affordability and paid the price. The collapse is a wake-up call. Housing is a human need, not just an investment. The lesson: you can't outsmart reality. What's next for the rental market? More pain for landlords, more deals for some renters. The oversupply will take time to absorb. Rents in luxury sectors may keep falling. Distressed sales are likely, with big firms snapping up properties at discounts. One solution: convert empty offices and luxury units into affordable housing. If cities invest and change zoning laws. Renters should stay vigilant. Great deals may come with risks like poor maintenance or unstable landlords. Advocacy groups are pushing for stronger tenant protections. This collapse could reset the market if we learn from it. The Hope Future Development focuses on real needs, not just luxury. The crisis is a chance to build a more stable, equitable housing system. August 9, 2025. The rental market lies in ruins. Landlords panic, for rent signs multiply, and the old rules are gone. Overbuilding, economic shifts, and affordability limits brought the industry to its knees. Cities like Austin and Boise remind us no boom lasts forever. The collapse exposes housing as a basic need, not just an investment. The panic is a symptom of a deeper problem, treating shelter like a stock market gamble. But in this chaos, there's hope. The collapse is a chance for a fundamental reset toward balance and sustainability. It forces us to ask, do we want housing for the highest bidder or for everyone? The road ahead is long, but the power shift proves the system can change. Renters have leverage. Investors have a lesson in humility. The real hope? A more resilient, equitable, and human housing market. That's a foundation worth building on.